Hear this out. We had 901 new homes that hit the market in the Waterloo region only in the month of January 2025. Now, to give you some perspective, that's about 50% increase from the same period last year. And that's according to a recent market report that just came out from the Regional Real Estate Board here in the Waterloo region. I am going to share my screen. We're gonna dive deeper into all that data. And honestly, if I were to sum it up, I would say there are some good optimistic signs on one hand, but then there are some concerning trends that are showing up, especially in the condo market. So we're gonna dive into all of that to give you guys a hands-on perspective of what you can make out of this market and what we can expect heading into spring 2025. So stay tuned and let's get straight into it. And just a quick intro before I share my screen here. In case this is your first time to the channel, be sure to subscribe and tap on the bell so you are the first to learn about the current market in and around Kitchener-Waterloo. My name is Dharmik Dixit. I am a local real estate agent serving Kitchener and surrounding towns. And I have people just like you who reach out to me looking to buy or sell in Kitchener and surrounding areas. And I absolutely love it. So whether you are looking to buy or sell in 9 days or 9 months, be sure to reach out. You can call me, text me, email me, or even schedule a Zoom call. All the info you will find right below in the description. I'll be more than happy to help you make a smooth move in or out of Kitchener-Waterloo. All right, so you can probably see my screen by now, and what I have pulled up here is the market stats data from the Regional Real Estate Board here in the Waterloo region, and I'll link this in the description below in case you want to dive in further yourself. But we are gonna go into quite deeper into this report right here as well. So stay tuned. Let's get straight in. Waterloo region housing market starts 2025 with higher inventory and softer sales. That's, rightly so. This is how I would sum the month of January. But let's go take a step further and see. We saw in total 329 homes were sold in the region via MLS system. So if you look at year over year, it is actually a 12% decrease compared to the same period last year, so last January. And if you look at the 10-year average for the previous 10 years, it does result in close to 19%. So sales are down by about 90% compared to the last 10 years average. So soft sales, very slow market, transaction and activities overall are still slow. But there is the other side to it. We are noticing a trend. Sellers did get very optimistic in the month of January to begin the year. So they have come to the table, and it shows we have nearly 50% more active listings compared to the last January, and well above the 10 years average. So inventory is very high in terms of the overall housing stock, whether you're looking for detached or townhomes. And when I look into the charts shortly, you will see what I mean. But we have substantially high levels of inventory right now. What does that mean? A lot of options for the buyers in this market. And that also means that sellers are no longer the ones calling the shots. It's no longer, I would call, a seller's market. If not a buyer's market, I would say more of a balanced market. And if buyers don't respond to this high rise in the inventory levels, guess what? It could very well turn into the buyer's market. So buyers could start calling the shots, bringing the prices further down, but we are yet to see that. Now, overall, if you see, one thing I want to highlight here is, we had detached home sale down by about 10.5%, townhouse sale down by about 8% year over year compared to the same period last year. This is a worrying trend. The condo sales are down by about 30% year over year. Now, this could just be 1 month, and it could be a one-off situation, but I want to pay close attention to this, especially if you are a seller who has a condo that is owned and is coming due for closing anytime soon. Yeah, there is something you need to be worried about, and you really need to start planning for that. And I will, as I go into the numbers, I will tell you more about it as to what we are seeing in the condo market. It's a little bit concerning. But going further, I won't go too deep into the average sales price. These are mere averages. So the tool that you want to be guided by is the Home Price Index benchmark price. This is the gold standard. If you're not working with a real estate agent, just trying to gauge what a particular type of house, like a town or a detached home, for example, would be priced at in a given market condition in your given neighborhood, the HPI tool is the gold standard you want to be guided by. So feel free to use this tool. Again, prices have been fairly flat, even if I look at the whole year over year, but as well as the month over month, prices have not moved in a particular direction in a dramatic way. So we will go further down, but like I said, I will link this all in the description so you can always play around and get yourself a little bit familiar, a little bit more comfortable and more educated and informed about the current market conditions. So these were the remarks by the Waterloo Region Association of Realtors Chair. Bank of Canada, obviously, it was all priced in, the 25 basis point that we saw in the last week of January. Everyone was expecting it with the CPI data, the unemployment data getting better. We'll talk about the unemployment as well. But, the reduction welcomes potential. It's a welcome news for potential new buyers, home buyers. And this is the worrying concern, like the potential trade war that's looming. Obviously, we saw it's still in the air, but it gave a lot of relief to Canadians, the fact that it was delayed by another month. And we'll see how things pan out, but hopefully we won't see that in effect in its full force, because if that was to happen, we all know that would be not so good for our economy. In fact, it will be detrimental to the economy, and housing being part of that, it's no surprise we will see a very sluggish, and in fact we could see market coming down all the way. So but again, no one knows where it's heading, but it's at this point, what we know, at least it's not that likely that we will see the tariffs come into effect in the full force. We may see some version of it if that would be the case, but we'll closely monitor it. Here is the thing. So the sellers have come to the market, right? But buyers are hesitant. You know why? Because the job market, the consumer sentiments, and I'm not talking about the interest rates here. I'm talking about the looming tariff threats from the south of the border. I was at the RBC Economics conference this past week, and Dave Richardson, who is the head of RBC Global Asset Management, we had a brief chat, and he's like, we had got the most amount of calls this past Friday when the tariff threat was looming on Canada as of Saturday last week, more than the number of calls we got from our Canadian investors at the time of 2008 and 9 financial crisis. So you can see how worried and concerned the Canadian Canadian investors are about this tariff threat. And when people are feared and worried and anxious, no one is going to pull the trigger and make big decisions. Rightly so. They would rather be more cautious in terms of how they proceed. So that is actually showing up. Those are the things we are seeing in the market. You can see sellers are coming in herds to the table, but the buyers are not yet coming back on the table. So that's what keeping the sales overall very, very soft. We had 900 new listings. I'm not talking about total listings. We had 901 new listings to the MLS system in just last month. And as you can see, that's an increase of 25% compared to the January last year, and still a significant 27.6% increase compared to the previous 10 years average for the month of January. We don't see that many listings come up, honestly, in the month of January. And this is a significant increase month over month, but also year over year. So total, we had like 1,300 homes for sale in the month of January, which is a crazy 49.5%. So close to 50% increase compared to January, and about 71.5% increase compared to the previous 10-year average. So now let's take a step forward and look at the charts. We'll take a high-level look at the charts as well. Sales by property types. You can see detached, townhome, condos, and the semi-detached. Now, two things to note here. Month over month, sales have remained fairly flat. So sales, when it comes to transactions happening, fairly flat. And rightly so, because the buyers have not come back to the table as much as sellers did in the month of January. Average sales price and the median sales price, like I said, I'm not gonna go into it too deep because this does not truly reflect market, at least in the short run. I mean, take a look at it. Like in the month of January, the average price of a single detached family home that sold was $881,232. Now, that's not the true reflection. I mean, that's an average price for the total number of detached homes sold in that month, divide by the total dollar volume of that price, right? So that's how we arrive at this average. Sorry, the total volume of the price of all the detached homes sold, divide by the number of detached homes actually sold. So that does not mean that the detached homes were selling for $894 in the month of December and now they're up down to $881. Or in other words, from November to December, it did not go up from $864 to $894. So again, average and median price, they're just for a long-term reflection, it's good, but for a short run, those data are useless. Average days on market is a great number. What you can see are average days on market has come down overall, but you have to look at what is happening with your particular type of property. If you own a detached or a town or a semi, you have to look at more closely as to how is that responding to your particular type of property. You have to keep in mind this does include condominiums as well, and you will see condos average days on market will be much higher than that of some other properties like the townhomes and detached homes. So just keep that in mind, but we have seen come down from 37 to 33 days, still well over 4 weeks. And that's obviously because we are not seeing as many buyers in the market and we have more sellers than the buyers. So it's still very much balanced, somewhat leaning towards a buyer's market, at least right now. Months of supply. So this is the inventory supply. Months of supply, we had 2.3 months of supply. It's slightly up from the December, and it's nowhere near though the last fall levels, which is well over 3 months of supply. But still, 2.3 months of supply for buyers, honestly, that means that, in other words, they have some great options. They don't have to rush. They don't have to go crazy about bidding wars and all those things. Even if sellers are holding an offer, you can do your due diligence. You can sit back, relax, and make an informed choice that you feel comfortable with without having to rush into haphazard decisions. That's what it means. And this is where I'm trying to define and kind of interpret those numbers to you as to what that would mean for you if you were a buyer. For the seller, this would mean that you have to be prepared to kind of stay in the market and trust the process, your marketing, your pricing, whatever strategy you have in place. Stay in the game and results will follow. So just keep it up with that. New listings, this is exactly what I meant. We looked at it. December, we only had 350 new listings. That's typically seasonal, but we don't see January month spike up such high with new listings, and we saw 905. I don't know where the gap is. The other number was 901. This is 905. I don't know where the gap of that 4 homes are, but we have roughly 900 new listings just in the month of January, which is crazy in my opinion. Homes for sale, in total we saw earlier close to 1,300 homes for sale, up from 1,100 we had in the month of December. But dollar volume, again, it's just a mere number, not necessarily helpful to the buyers or sellers. It's good to know the overall volume of real estate sales that happen in the region. It's a nice to know type of number. I do want to take a step back. And this is the condo trend I wanted to talk to you guys about. The total inventory across the market increased by 43%, so roughly close to 44%. But we had, the overall average for 2.3 months of supply by all property types. But this is where I have a concern. The condo apartments had the highest inventory with over 5 months of supply, followed by the townhomes, 3.5 months of supply, and detached had the least amount of supply, only 1.5 months of inventory. So what that means actually, if no new homes were come to the market, let's say no new listings come into the market, it will still take well over 5 months for all the condo apartments to sell at the current pace. That would be the case. For townhome, it will be about 3.5 months, and for detached, it'll take just over 4 weeks to get all the inventory off the shelf. So you can see if you're a detached homeowner, it's great for you. Despite the high rise in the inventory, if you're a detached homeowner, yes, you could still get, there's still good demand. At least these are lagging numbers, but there are some great demand in the market for detached homes than the townhomes. But the condo, we have seen a sharp rise in the inventory, and we are seeing the sales, on the other hand, is declining. It was a 30% decline year over year in the condo sales. So with a lot of condos that were purchased back in 21 and 22 during the peak of those time are due for closing in this year into the next year, and that would only add more fuel to the fire in terms of additional supply of condo. We are already seeing signs of crashing in Toronto market. I mean, no one wants to buy those condos in Toronto anymore, and that could very well end up being the case here in the Waterloo region. Again, not trying to sell fear, but really sharing with you guys the true reality of the current market situation. But that's how numbers look for the month of January. Now, with all this data we just looked at, it obviously brings up one big question, and that's going to be, are we going to see a good year for the real estate market in terms of the activity and the price, or is it going to be just another sluggish year? Well, that would really depend. What we are seeing is there are clearly early signs of sellers coming to the table with some optimism. And if buyers do respond to it, then yes, we are in for a really good year for a real estate market, and we could say things would stabilize. Having said that, we are clearly seeing the buyers are very much hesitant. Consumer sentiment is still very much low. We saw 6th or 7th consecutive rate cut by the Bank of Canada this month, like in January. And still, we are seeing sluggish activity and response from the buyers. So interest rates is not something that's holding the buyers anymore. It's more so the broader economic condition, like the labor market, which is still very weak. Although we did see some good signs of it rebounding. We had close to 91,000 jobs being created in the month of December, and we have the next set of data due for this Friday. So we'll take a closer look at that. But yeah, there are signs of economy rebounding. At least it seems like the worst is behind us. So with that, if we do see overall economic condition and the tariff situation that is looming on us stabilize by spring or summer, yes, that will definitely bring some more buyers back in the market, and we could definitely see some signs of the activity picking up. But if you're a buyer in this market, and if you have a question whether or not you should buy, here's my take on it. If you're ready and if you have a stable job, in the sense that you think you are going to keep your job for at least 6 to 12 months, there is no looming possibility of you losing your job in this market. Secondly, you have at least 3 to 6 months of money, your monthly cash flow that is saved up besides your down payment and your closing cost, then yes, this is a really good time for many buyers to jump in the market. There are some great options. There is tremendous amount of supply in the market. We just saw that. So there are a lot of great options, great deals for the resale market for the buyers. Now, having said that, what about if you're a seller in this market? Well, if you're a seller in this market, then you want to have your marketing, pricing, and offer strategy on point. And you want to work with the professionals, the right ones, that know how to navigate this particular market, this kind of market where you are literally competing with number of other sellers in your street, in your neighborhood, to sell your home. So you have to outsell yourself versus your competing sellers, because guess what? There are only a handful of buyers in the market, and to get the right price, the right offers on your property, you want to have your marketing on point, and that's going to be the key. But nonetheless, if you got some value, be sure to give it a thumbs up, subscribe to the channel, and tap on that bell so you are the first to learn about the current market in and around Kitchener-Waterloo. I will come up with another video early in March when we have February data come up. It'll be very interesting to see whether or not the buyers have responded to increase in the supply and of course the reduction in the interest rate. And whether you are thinking of buying or selling in 9 days or 9 months, be sure to reach out. You can call me, text me, email me, or schedule a Zoom call. I'm very easy to talk to. All the info is right below. I'll be more than happy to help you make a smooth move in and around Kitchener-Waterloo. Until next time, well, I will show you around town.